The trade desk just reported earnings and it was a huge letdown. The stock plummeted over 28% and is down $33 right now in after hours. Is this the right time to buy the stock? Is this an overreaction or what's actually going on here? Let's get into it. Now, taking a look at the stock, you can see here that the stock has just plummeted in after hours, dropping from this 122 area down to $88 per share. Now, this is all because of earnings, and if you read right here, you can see the trade desk missed Wall Street revenue expectations in quarter 4, but sales still rose 22% year over year. Now, looking at some of the numbers you can see here, the revenue was $741 million for Q4 versus the analyst expectations of $759 million. That is a difference of 2.4%, and that is a massive miss when talking about revenue. Adjusting earnings per share, EPS, was 59 cents versus the analyst estimate of 57 cents, so you had a nice beat there around 3.6%. But looking at the rest of their guidance and overall the earnings and what they produced for the full year of 2024, they had a great year. And as you can see here by the CEO, he even said himself, we once again outpaced nearly every segment of digital advertising in 2024, delivering $2.4 billion in revenue, marking accelerated growth of 26% year over year, and recorded $12 billion spent on our platform. But at the same time, we achieved significant profitability and cash flow. While we are proud of these accomplishments, we are disappointed that we fell short of our own expectations in the fourth quarter, said CEO and co-founder and founder Jeff Green. This is massive, okay? This is definitely not something that is you should be proud of saying during an earnings report. Now, they had a great year, a great Q1, 2, and 3, and you can take a look at this chart and see here, revenue for the past several years has been extremely well, has been strong and growing exponentially. But this specific quarter was not the expectations. The expectations were not met, and because of that, the stock has taken a massive hit. Now, I'm going to go right off the bat and get you guys in on this one early because I think this is a massive overreaction. Mark my words, say what you want. Now, what's going to happen to this stock? We're going to see the market open tomorrow morning, and this stock is going to sell off pretty strong for the first few minutes. But the fact that this stock, if we pull back here to the past couple months, we haven't seen this price point of a stock in well over 5 months now. It's been basically since this past August when we saw the stock at around this $80 to $90 area. And we've had a massive rally, all-time highs up to 141. For it to pull back 28% off of a lousy quarter of revenue is extremely overreaction to the downside, in my opinion. A massive sell-off on something that was just blown out of proportion. But we do have to take into consideration a few things here. Looking at their advertising software, the digital advertising market is large and growing, is becoming more diverse, both in terms of audience and media. As a result, there is a growing need for software that enables advertisers to use data and automate and optimize placements. Now, they also said that a company's long-term performance is an indicator of its overall quality and sales growth. Now, thankfully, the trade desk's 26.9% annual revenue growth over the last 3 years was solid. Its growth surpassed the average software company and shows its offering resonates with customers and is a great starting point for our analysis. But something we do want to take into consideration is looking ahead. Sell-side analysts expect revenue to grow 21% over the next 12 months, which is a deceleration versus the last 3 years. And despite the slowdown, this projection is healthy and suggests the market sees success for its products and services. So you can see right there, maybe the growth for the next year is not looking as strong as it was in the past several years. But for the stock to still be performing at a growth rate of 21% over the next 12 months, that is still well above market expectations. And for analysts to say that this is a massive downside and downgrade for the stock, I think this is just a huge overreaction and sell to the downside. And rolling back to what we were looking at with the chart here, anytime a stock pulls back and there's this much fear when a stock is down 10, 15, 20, even 30%, the stock tends to have this spike back up to the upside, whether it's that following day or several days later or several weeks later. We've seen this happen before with multiple stocks, especially on earnings reports. Earnings reports scare people, the stock falls, and it gives a great buying opportunity for those who have done the research and due diligence. Now, the trade desk, in my opinion, is a very, very strong stock. It's a very strong strong company, and although we didn't see a strong fourth quarter and maybe a little bit more conservative on our next full year 2025 guidance, I still think this is a massive stock right now at a great discounted price to get in on. And taking a look at that, we're going to write this out right here and say, look we have seen $75 as a low over the past year. And since then, we haven't seen prices this low in quite a while. Now, this does put us well below this red SMA line here, which is our overall direction. And when this populates tomorrow morning, we're going to be down here around this $88 to $90 range. So if we draw a level around that $90 range here, you can see this is where we're going to probably start trading sometime tomorrow morning, unless the stock starts to sell off more in the pre-market tomorrow. Now, I think that at open, you're going to see the stock fluctuate, but I think that if we can hold at least this $75 area right here, this is a massive, and more $76 area, this is a massive holding point of support right here. But I don't think you're going to see a $75, $76 price point at least tomorrow. I think you're going to see a massive bounce to the upside in the short term, and then a little bit more of a pullback maybe over the next couple days and weeks before it stables out and then continues to rally up higher. I think that you're going to see this between $85 to $90 tomorrow at open, and then at open you're going to see it rocket from $90, could potentially go up to $100 to $105. Now, when it gets to that price point, you know what? If you played off of the trade and you made your money, then great, you can jump out of it. But if you're looking long term, buy some shares at the open, buy some more shares as it maybe falls later in the week. Whatever tends to happen with the stock, if you're going in for the long term, you've done your due diligence and research, you're going to dollar cost average this thing, start a position at $90, buy more shares down at 85, buy more shares down at 80 if we even see that as a price point. Because when this bounces off of any support and we finally stable out, whether it takes a few days or a few weeks, or we see a bounce tomorrow, you're going to be ready and you're going to have that position already locked in. So just be mindful of that. If you're playing the short-term game, get in and get out. You're going to see a massive amount of volume tomorrow to the upside in the morning. I can just see this happening already, and maybe I'm going to be wrong. But if we do sell off more in the morning, then that's a better opportunity to buy more for the long term. And that brings up the long-term point of view. If you're going the long term, make sure you do your due diligence and research. But at the end of the day, this is a fantastic opportunity for long-term investors as well as short-term investors. So definitely keep that in mind moving forward. And guys, if you guys are new here, hit that subscribe button, like the video, let me know what you think about the trade desk down in the comments below, and I'll catch you guys in the next video.